on Wednesday, the Fed cut rates. Instead of a quarter point, they cut rates aggressively down 50 basis points. And this all had to do with the labor market that I think that we're all in, dealing with a lot of the unemployment, a lot of tech workers like myself that are laid off, that are still looking for work like 6 year months later. And I think the big part of this, that's the elephant in the room that nobody wants to talk about, is the labor market. And they were trying to taper inflation, get that down, but I think in all it had to do 100% with the labor market. It's BS that they won't. They hint that here and there, but really I think it's had to do with the weak labor market, that these jobs aren't, like, I think it's, they were saying like it's 1 to 1, like one position, one person, but I that's laid off. But if they all matched up, then we wouldn't have these the amount of people like myself that are just still looking for work 6 a year months later, that can't find anything, that are having to go to freelance, or they're having to get something lesser to just try to make, you know, manage your bills and everything like that. So I think 100% it had to do with the labor market. But in all that said, but I think it's a good thing that they finally, the Fed was the first to realize that these politicians aren't, they're not mentioning that much about the tech market, how people are just still looking for work. It's just horrible out there. And then I think the Fed finally realized that all those all these layoffs that happened in 2022, 2023, 2024. Yeah, mostly 23 and 24. But a lot of those layoffs, then and then they're finally, they don't want that, they want to contain that, and they don't want to go into other sectors, I think. And now that they have pretty much have inflation tampered down, it's just a cause and effect. When they had to raise all the rates and then nobody had the money to borrow, these startups didn't have the money to borrow. So I think this is going to improve things in a way. It's the start of the easing, and I think it's going to help the tech market, the job market overall. Now that, you know, companies are going to have more money, that more capital that they can borrow from, more people that they can hire because they have more liquidity out there. So overall, I think it's a good thing. And instead of just doing it a quarter at a time, like, the bleeding will still continue. So I think they did good. The 50 basis point cut should help out a lot, and we'll see what happens if it's going to help us get jobs, or I don't know, who knows. But it's a good sign. And then a lot of startups will have more money, to more and more options to hire more people, because they can borrow more. So I think it's a good start that we're seeing this from the Fed. And then, of course, you don't hear about politicians. Even, I don't even think they even mention anything about tech layoffs or either side, or the trouble in the markets. I think maybe one side to the other. I don't even want to get into politics, but it's it's a shame that it's just the way it is. It's just politics for you. They kind of really don't care about your situation, and they talk a lot. And once the election is over, they go back to being how they are. So, salespeople. But the it was good news Wednesday about the cutting rates. And then, like I'm saying, like, it's the start. So at 50 basis points, and I think that maybe in October they'll have a quarter, maybe, or they may skip October or whatever, and then go to November and quarter, and just, so they have a lot of time. They can keep the easing cycle. You never just have one rate cut and they stop. And so it's just they raise the rates, just trying to get inflation, trying to, so you don't think about inflation, so it just stops inflation in its tracks. But then I think you're going to always have these high prices. It's going to be, stops it at a point, but then I mean, you may have some reversal, like where inflation, it goes the other way, and then they start lowering prices. but a lot of these prices are like baked in. I think it just depends. Like at the grocery, I haven't seen much. Maybe just keep an eye on that grocery and see if your grocery prices drop from this, but or the next couple years. But I think it's going to help the the tech market, the job market, because there's just going to be more options for startups and a lot of companies now they got the green light to hire. And then it's gonna they had the market had a little dip, but I think that's going to be a green light too for the stock market. Like the good times are back where they never were for those big tech companies. They never had a the party always kept going. It's just that they laid off a bunch of people just to be kind of more just as far as more lean and all that stuff, all that other BS. But thinking that they're gonna avoid the recession when they kind of almost created it. And I know, I think it's only a tech market that's really had all these major job markets. Other people in other sectors, I don't see how much they can relate. Well, maybe they can. I mean, sure, but that's what the Fed's trying to do, just trying to stop it from spilling over to other sectors. But which is great. And then and they're going to be easy for the next year and a half, 2 years, and it's going to help the housing market. It's going to help everything. And in a way, I really don't care. Like if you have a lot of cash, you're making that interest rate on cash sitting on there, and then it's nice and all, but it's better for helps the average person that has credit card debt and everything like that. They're trying to get a job, and I don't really care about the cash that I have making that. Maybe it was making a little bit more interest, but I'd rather have the job than have that little cash in the bank, and then it'll boost the interest rate. So I want to be working, and other people want to be working. So I hope this helps. Hopes everybody out there helps them land a job, and helps that other employers that are hiring, hopes it gives them an incentive to hire more people, which I pray that it does, because it stinks. Like you have your bills, and you have, like for myself, your bills, your income is less than what you're bringing in. That's almost my situation right now. Trying to do some side hustle and stuff like that to boost it up, but it's almost you're spending more than you're even making. And then like I'm not working right now, and then just freelancing and side hustle, but I'm not having a steady paycheck come in, and it's not fun. But let's hope and see that these rate cuts helps the average person get a job, and with employers being incentivized to hire people because of the excess money that's coming into the market. So the market's been Goldilocks for a long time. It's almost all-time highs, and it's just as funny. No job, and then all my investments are going like crazy hot, but you don't have the income coming in. It's just like that's how life is, catch 22, or whatever the catch is. But yeah, it's like that's what I kind of did. I was buying a lot, investing in all that, because I knew that those tech companies are still going to be going through the roof, but they're not going to be hiring. And there's like a lot of, I think there's a lot of Microsoft gaming layoffs. I know Cisco had one round, I think in April, and they had another round in September. And all in a while, they're making good money there, but it's just, I think it has to do a lot with AI. They don't really want to talk about that. And like my last AI video didn't get much traction at all, because when I brought up AI layoffs, but I think totally has to do with, a lot of it has to just do with how crazy how like the rates almost doubled, so their money was so tight. Even in the larger employers, especially with the smaller employers, they're just that higher interest rate just hurts them a lot more than larger employees, but it still hurts the larger companies as well. So I think this is a good sign that they lowered rates. And I think that's going to help people get back on their feet and start getting jobs again. And sometimes you have to, like with AI, like I'm learning AI and all that, sometimes you have to learn other things, try to market yourself that way to, don't fall against the trends. Like, don't keep your skills up to date, keep your skills up to date, update your resume, do all that stuff, try to hustle with freelancing and do the best you can there. But overall, it's still tough out there for a lot of people like myself that are barely making ends meet. So it's really tough. But I hope this is a good sign for everybody out there that these lower rates really is a blessing that will help us, all these tech people like myself, get back on their feet. That's just my take. But so yeah, if you like this video, not a financial advisor or anything like that, it's just my opinion on this, my take on interest rates and wanting people to get back on their feet and get back to work like myself, which I hope it happens soon. Pray for me there. But yeah, if you like this video, like, subscribe, and I like to do more of them. So if you do subscribe, that'd be awesome. And I'll see you back on the next one. And let's pray these interest rate cuts help a lot of those tech people like myself that are out of work, like all these people that are recently got laid off, and it's just horrible out there. So pray for us there, and I'll see you guys in the next one. Peace.